Hey everyone, welcome back. Today we're doing a deep dive into Bitcoin through the lens of game theory, because BTC isn't just code or charts, it's a massive strategic game played by millions. First, the current picture as of February 2nd, 2026. Bitcoin is hovering around $76,500 after a scary weekend dip. It tested lows near $74,500 in thin liquidity, then bounced slightly. That's a brutal 40% drop from its 2025 all-time high of about $126,000. Triggers include Fed hawkishness under new chair Kevin Warsh, lingering inflation fears, geopolitical noise, and heavy liquidations. Over $500 million in longs wiped out recently. ETF outflows reached $2.8 billion in 2 weeks, leaving many institutional entries underwater near 84K. This feels like classic risk-off panic, with thin trading amplifying moves. Analysts like Paul Howard at Winsent are saying no new ATH this year. But is this just another cycle shakeout? Game theory says yes, and explains why prices always go further than we expect. Let's break it down. We'll explore the hidden incentives that drive these massive swings. Bitcoin's foundation is a giant prisoner's dilemma. Players, holders, miners, traders, institutions face a choice: cooperate by holding or betray by selling. Cooperate. Everyone holds or mines honestly, supply tightens, network secures, and the price rises. A collective win. This is what we call the Pareto optimal state, where the group as a whole is better off. Betray. If others sell, I sell first to minimize loss. This leads to cascades and price crashes, individual safety, but group disaster. Proof of work enforces this. Miners solve puzzles for rewards, but attacking could yield short-term gains. Yet it destroys BTC's value, so rational players stay honest. This self-regulating Nash equilibrium keeps the network alive. Right now, we're deep in betrayal mode. Long liquidations, ETF outflows, and fear dominate. Prices drop because others will sell, so I sell. But long-term, fixed 21 million supply and halvings create sell now and regret forever fear. That's the upside engine. Understanding this balance is the first step to mastering the Bitcoin game. When the cost of betrayal becomes too high, the equilibrium shifts back to cooperation. Bitcoin isn't one shot, it's a repeated game with learning. Past cycles teach. Hodlers from 2018 or 2022 lows won big, so more people adopt hold through pain as strategy. Participant shifts are key. In downturns like now, 40% off highs, losses mount. We see forced hodlers, those two underwater to sell, and conviction hodlers who wait for the rebound. As the game repeats, the memory of the network grows. Sell pressure fades, supply tightens. The game tilts back to cooperation, and bottoms form. On-chain shows long-term holders reaccumulating, mega whales quietly buying. In bull peaks, winners explode, profit takers and leveraged blowups flood supply, leading to betrayal cascades. This explains 2025's 126K euphoria and the current pain. Every cycle, a new class of participants learns that the strategy of hodling isn't just a meme, it's a mathematically sound strategy in a repeated game. More losers eventually become more holders, building a natural floor that rises over time. We're watching the evolution of a new financial species in real time. Zoom out. Bitcoin adoption is a coordination game. Nations and institutions choose adopt or ignore. Early adopters gain an edge, hedging inflation and gaining sovereignty. If everyone adopts, the total network strengthens. The Nash equilibrium, widespread adoption, we're seeing it. US and Russia discussions on BTC reserves and institutions recommending 5% allocations. This is no longer a retail game, it's a geopolitical one. Global assets are around $120 trillion. If even 5% flows in, that's $6 trillion. A $2 trillion market cap can't absorb it without a massive re-rating, a 3 to 5x multiplier. This coordination creates a positive feedback loop. Risks remain, like mining pools colluding for 51% attacks, but game theory says it's irrational. The cost outweighs the benefit and self-destructs the value. For a nation, the risk of not adopting is far higher than the risk of adopting. This realization is what drives the next leg of the coordination game. As more players enter, the ignore strategy becomes increasingly dangerous. Game theory and psychology lead to extreme swings. Prices always overshoot highs and undershoot lows. Models predict ranges, But reality ignores them because it's driven by human behavior. History shows we often go lower than expected during panics. A 70 to 80% drawdown could hit 25K to 38K, but ETFs create stronger floors now. The 2026 outlook? We're in the betrayal phase, but holder buildup and macro flips could spark a cooperation rally. Long-term, it's a positive-sum game. HODL wins as supply tightens. 150K to 200K is plausible if coordination accelerates. Bitcoin's game theory makes it unpredictable yet resilient. Betrayal dominates dips. Cooperation fuels recoveries. Understand the players, not just the price. What strategy are you playing? Show DL through pain or wait for confirmation? Drop your thoughts below, like if this deep dive helped, and subscribe for more crypto psychology breakdowns. Thanks for watching. Stay strategic, stay in the game. See you next time.